Okay, we'll do our precious metals update here, June 19th, Saturday night. We'll start with silver. And just in general, this is just not a really exciting trade. And exciting is the wrong word. It's also not exciting, but more importantly, it's just not a good risk reward. I mean, these things are just kind of like lumbering around here. Let's just go through the details here. So we have our high on day 16. This is silver daily chart. Friday was day 25. We did make a higher low on June 14th, so higher than the previous daily cycle low. I mean, but at this point, this is just not really setting up a very good risk reward. If we look at the weekly chart, so this is interesting. Last week was would be week 20. That's assuming that the week of May 9th was a weekly cycle low, which is not necessarily clear, and GDX is suggesting that it wasn't. And so that's your big question: are we still in weekly cycle decline or not? And at this point, it's just you're not getting incredibly clear signals. So in my mind, it's not really worth a trade. There are many other things to sort of focus on. If we go to gold, so gold is similar sort of picture, weekly chart. We still haven't made a low below the probable ICL we have here. We would be starting week 5, assuming that that was an ICL on week 22. And the daily chart, our high is day 19. But I mean, look at this grindy action. I mean, up, down, up, down, up, down, up, down. I mean, and then you have this big downside. So this is the prevailing trend right now, the lower. We just kind of made a lower high potentially here, right? Like this is how you start to watch to anticipate what might happen next. We tried to rally, and now this Friday's bar. To be fair, this is just an inside bar. We need to trade below 118.34 means we're probably going to make a new low below here. But a move above 1857, 58 ish would be your sign that maybe you're going to go test the high up here. But again, the risk reward here is just ugly. I mean, this is a giant bear flag off of this big decline. At least until it's not a bear flag, right? Until it's something that fails, which is to say breaks up. And on the monthly chart, you can see it's just an inside month. I mean, again, just your perfect picture of something you don't want to be trading. I mean, look at that. It's just doing. It's just this is disgusting. It's just going back and forth, back and forth, back and forth, enough to make you queasy, and it's all just inside the range of this big giant bar. A lot of this is learning what to avoid as much as what to sort of look for. Like, no, you don't need to be trading that. And GDX looks the most bearish of all, actually, which is not a good sign, right? So we had our ICL on day 41, which was May 12th. We had our high on day 14. Not a very robust rally. I mean, if we kind of look at the, like, from low to high, 13%. I mean, that's not like compared to like this rally here, for instance. I mean, like that's like nothing. And now we've given it all back. I mean, you see that? Like we made this we had rallied up, and now we've actually made a new low below this low here, and we're consolidating here in what looks like a bear flag. Friday was day 25, inside day, presumably setting up for more downside Monday, if not Monday, at least in the week. And that new low that we made caused a new low on the weekly chart, which gives us, so that makes last week 20. This is your week 15, which was never actually a weekly cycle, or excuse me, it was never a swing low because we never were able to trade above 33.57, which is the high of this bar. So this candle marked the low, and we needed to trade above this high, and we never really did. So we consolidated inside here. We made this new low, which it isn't so very important to call out. It's entirely possible this serves as your false breakdown. This is some sort of double bottom stop run, and we just like rocket ship out of here. That would be awesome. That would certainly change things in terms of your risk reward. And is this a good trade? But right now, you're not getting any of that signal. And on the monthly chart, I mean, look at this. It's just dribbling lower. I mean, not a good look. I talked about the major cycle low for other asset classes. I mean, in this case, all we got was a rally that lasted 5 months, right? So we had this major low in March. We rallied here for 5 months. And then we've just been going lower ever since. That high was in August, right? That August 2020 high. So think about that. Look at my other videos. The other asset classes have rallied for 20, 22, in some cases 25 months. This asset class, this GDX has rallied, gold miners rallied for 5 months. That tells you a lot. Now, maybe it's going to be much stronger in this next long-term cycle, right? Because this long cycle was just just complete nothing burger, right? Like it went lower, then it went higher, then it went lower, then it went higher. Now it's going lower. I mean, this is all the while other asset classes are grinding higher, into month 20, 22, 25. So again, this is as much to give you a sense of what to avoid as much as to what to pay attention to as we close out this long-term cycle and move into another, a new long-term cycle. Although we probably have another like 7, 8, maybe even a year to go, which is why patience is incredibly important. And I think the last thing we'll want to look at is the ratio of GDX to GLD. That just gives you a sense of how the miners are doing relative to the metal itself. And it's just looking horrendous. I mean, look at that. If this thing had its own cycle, we did have a really powerful move. So coming out of the low from this earlier this year, January 24th, this was a really strong move, nice big trending move. And then we had this big downside, and ever since we've just been rolling over. We made a lower high, now we're rolling over. Now it looks like we want to sweep these lows here, and that's basically challenging this rally here. So now it's a question of, right, like because this is a ratio chart, we could see, miners drop by a ton and gold not drop by a lot. Or we could see them both drop by a lot, but miners drop by way more. So many ways this could play out, but I'll draw your eye to the yearly chart. So every candle here is 1 year of price action. Again, this is still a ratio chart. Look how this thing looks like it wants to fall off a cliff, right? This is a big shooter, right? It tried to make that new high. It completely failed. And so to me, this says really bad things about gold in general, since miners tend to lead gold. Just not a good look. What a disappointment of an asset class so far. It'll come back at some point, but just right now, just not someplace you want to put your money.